Insurance. What do you do to stabilize California's insurance market without pushing insurers out of California? We're looking at folks who cannot get insurance. How do you keep insurance companies in California while still keeping rates down in a world where we're seeing climate-driven disasters? You have people who live here who say, I cannot afford to pay the prices that they are charging. You have a private industry that does not have to work here saying, if you keep building expensive homes near burnable things, we cannot insure that.
No, but there's so many common sense things you can do, for example. So there was, I think there's some, I mean, I need to dig into it, but that someone in the insurance industry was telling me that there's legislation that actually that stops something incredibly common sense being done, which is defensible space being put around new building in those areas. But anyway, as I understand it, Lara, the insurance commissioner, has finally made the changes in how insurance companies can price future risk. That a lot of people have been asking for many years. I mean,
that's sort of a separate issue, but let's get to that.
It's a massive issue for so many Californians. Either these insanely high premiums they're paying, or they can't get insured at all, and they're on the FAIR plan. And we know that the state-run FAIR plan is a disaster. If anything goes wrong, that's a massive financial liability. This is a huge problem, and so. I've spoken to the industry about it, and the insurance industry tell me that finally they feel that some of these long-standing policy mistakes have been corrected. And so that they're telling me, I mean, we need to dig into it more, and perhaps you could do some investigating.
I've done some investigations. I'll send you the link.
The insurance industry is telling me that actually things are getting back on the track that they feel they're going to come back into the state. Yes, rates are going to go up, but at least they're going to be able to insure because they can price risk properly. So that's what I'm being told. But again, let's look at another component. Why are premiums so much higher in California? Because building costs are so much higher in California. So of course, if you got to insure a building, like what's the replacement?
Yeah, most people are underinsured because they can't afford it.
Because it costs so much. So if we bring all these things tied together, if we bring the cost of building down, that's another way we can bring insurance costs down, because it doesn't cost so much to rebuild in the event that something happens.
Insurers have to make money. There are two things we need to do here. Both of them possible, both of them driven by new technology and new ideas. One is wildfire control. This is a fire ecology. There are always going to be fires. What we're trying to avoid is devastating fires. And that is something that can be monitored, that can be controlled with new technologies. I believe the governor's doing it, but I believe we can control devastating fires. That's the actual issue. But the second thing is, I believe there are new technologies that are quite inexpensive and can be financed to harden houses that have an incredibly high success rate, way over 90%. If that's true, and both of those I believe to be true, we should go to insurance companies. This is the biggest insurance market in the United States of America. They want to be here. They have to be able to write insurance that makes money. The job of the governor is to go to them and say, you need to take into account the data. We've solved this problem. You can look at it. You can write successful insurance. We insist that you get the data and charge people fairly for the people who've hardened their houses, and to take into account the fact that we have, as a state, dealt with devastating wildfire.
So I think we need to think about changing some of the rules around how insurance companies function in California. I think the proposal that the insurance commissioner rolled out is the right one. I think it came too late. We've already seen too many exits. We've already seen rates go up too soon. I support the wildfire fund. I think that's going to be a big part of having a plan in case of catastrophic wildfire, so that our insurers know that that fund is going to be there for them, and people who lose their homes know that fund is going to be there for them. That fund needs to be recapitalized and restarted. That's up right now for debate in the legislature, and I support that fund. Ultimately, I think we're going to have to be realistic. The costs of insurance are going up in many places. That's not just true in California. That climate change is happening everywhere. But the way to bring costs down is to make sure we have a lot of companies in the marketplace competing on price. So we're not going to be able to bring the price down unless we retain those companies.
So we're going to have to bring back the private insurance market, and it's comparable to what we're seeing in energy. If we don't have a functioning competitive market, prices go up, and pretty soon we're overly reliant on government to provide services, and we don't have the resources to do it at the scale we would need. We'll have to allow the private sector to come back into the insurance market in California. That means we have to be able to price risk, and that's not easy, but folks who are living out in fire zones will have to pay more. I think the state can help offset that by investing in those fire breaks and doing more vegetation management to reduce catastrophic risk. If we have fewer catastrophic fires in the coming years, we will not only save lives and property, but we will see rates start to come down. And so the state has to play a role in better reducing large fire risk and catastrophic loss. We also, though, need to have a functioning market where private insurance companies are competing for people's business versus what we have today, where government's the only backstop and we don't have the funds to actually deal with the amount of need that's out there.
Yeah. So if you remember, the insurance market is based on spreading risk, right? The more people you have, the more you can spread the risk. Somebody has a problem, you got a whole bunch of other folks who don't. Spreading risk. Okay, you can still make money. So the insurance industry can still make money. They just have to know how to spread the risk. And what we have to make sure is that when we pay them, they're not using that money to make investments outside of our state. You want money from us? Let us show us that you're putting the money back in California. So do what I always keep saying to you. You got to bring folks in early. Let's take a look at what you're saying your problem is, insurance industry and staying in California. Okay, show me your books. And if you're telling me we're not letting you charge enough, show me, and we'll see.
And that's what Ricardo Lara says he's doing right now. I mean, do you support what the insurance commissioner is doing right now?
I can't tell you I know everything that the insurance commissioner is doing. What I can tell you is there are still people in the Pacific Palisades and Altadena who haven't yet heard from their insurance company about when they're going to get their money or how much they're going to get. And that I would never let stand. I would do what I did as secretary, where I had to bring in industry titans and said, you have a problem, we have to resolve it. We're not leaving this room until we come up with a solution. We did that. We could do that again with the insurance industry and say, at least, even if I don't have by law the right to say this, I can say, look, you don't want me to go out as governor and say that you aren't willing to tell your own customers when they can expect to receive their check for their burned house that burned 6 months ago.
This is how we got here. Until just recently, we didn't do catastrophic modeling in this state. Every other state in the country did catastrophic modeling because we're living in a world of climate change. In Florida, it's hurricanes, here it's fires. 2, we didn't allow reinsurance. Every state allowed reinsurance. Why?
Allow them to charge for
Well,
reinsurance.
No.
To pass on the cost of reinsurance to the consumer.
No, we didn't allow them to reinsure.
Well, they're all reinsured, but we didn't allow them to charge us. So in other words, I'm not paying for State Farm's reinsurance.
Right. 3, across the country, the average time that it takes to raise rates is 3 months. In this state, it was more than a year. So we brought us to some of this. Now we have Prop 103, and so we have an opportunity to obviously, review rate hikes to make sure they're not price gouging, and I will never support price gouging. But when the entire market leaves because of those 3 issues, disproportionately, by the way, then you have a problem. And we should have seen this coming.
2 things can be true at once. The insurance industry has to pay more. They've earned so much money off of Californians, and then to pick up and leave in our moment of greatest need is unacceptable. And I will hold them to account, and with more regulation and more pressure. At the same time, we need to learn to build differently. Wildfire is part of our new normal in the state of California, and we have to build with materials that will keep our homes safer. We have to build in places that are less likely to be impacted by fire or by flood. We have to have enough, natural burns to address areas that could trigger fire. We have to do all the things that we know to keep our communities safe.
But why haven't we done that thus far? I mean, it's wonderful to say we need to do these things, but how do you tangibly do that if we haven't been able to thus far?
Well, I think the urgency is certainly upon us, and we know that we have to do it. We have to educate home builders and educate homeowners, prospective homeowners, to not put themselves in situations that will keep them unsafe. And it's incumbent on us to do all the prevention that we can, because we don't have enough people power and resources to keep up with all of the disasters that can affect us. And so, again, I see it as holding the insurance industry accountable. In this state, California has tried to create its own insurance industry. There's no way that California can self-insure in the way that this private sector could. And for them to be able to take all the money from Californians, and then when we need them in places like Pasadena and Altadena, that they just pick up stakes and leave is unacceptable. I'm going to hold the insurance companies accountable, but I will also hold ourselves in the state accountable to how we build and where we build.
But to be clear, you don't, as governor, you don't have the authority to hold them accountable for leaving. They're a private company, they can leave.
What they're really saying is they don't want to dip into their profit margin. What they're really saying is thank you, California, for all the years where the majority of Californians paid their homeowners insurance, never made a claim, and then when they finally needed to have their home insured against some disaster, the company that they paid all that money to left them high and dry. They can do better. And if they want to do business in this state, the governor does have authority to hold them accountable. If they want to leave, then they can do business elsewhere. But I guarantee you, they're going to want to, at some point, serve the 40 million people in the great state of California. We expect them to be a partner. We have no problem with someone who wants to earn a profit, but take care of the people who provide you that profit. And as governor, I'll stand up to those companies and say, be a partner, invest in our future, invest in our good health and our goodwill.